The world of cryptocurrency is always moving. PiCoin is one project that many people are watching closely. As of June 1, 2025, the market has seen some changes for PiCoin. The token's price experienced a notable decline. It fell by 4.2% in a single 24-hour period. This brought its value down to approximately 68 cents. Such fluctuations are common in the crypto space. However, they always catch the attention of users and potential investors. Understanding these movements is key to understanding the project's current standing. This recent dip was not an isolated event. It formed part of a broader trend observed over the preceding week. During that 7-day period, PiCoin's value saw a more significant reduction of 14%. This kind of downward pressure can be unsettling for holders of the coin. It raises questions about the immediate future and the factors influencing its market performance. Reports indicate that 11.2 million Pi tokens were unlocked. When a large number of tokens become available on the market, it can often lead to increased selling. This increase in supply, if not met by equivalent demand, naturally pushes prices down. The timing of this token unlock seems to coincide with the observed price drop. This highlights how tokenomics and supply schedules can directly impact a cryptocurrency's valuation in the open market. Pi Network was created with a distinct philosophy. It aims to make cryptocurrency mining accessible to everyday people. Traditional cryptocurrencies like Bitcoin require powerful computers and a lot of electricity to mine. This creates a high barrier to entry for many. Pi Network, however, allows users to mine Pi coins directly from their mobile phones. This approach is designed to be energy efficient. It does not drain phone batteries quickly or require specialized hardware. The goal is to distribute the currency widely from the outset. By allowing mobile mining, the project hopes to foster a large and engaged user base. The founders believe that a widely distributed currency has a better chance of becoming a commonly used medium of exchange. Pi Network is currently operating in what is known as a closed mainnet phase. In this phase, Pi coins cannot be freely traded on external cryptocurrency exchanges. The network is live, and transactions can occur within the Pi ecosystem among verified users. However, it is not yet connected to the broader crypto world. This controlled environment allows the developers to test and refine the network. Predicting cryptocurrency prices is always a challenging task. The market is known for its rapid changes. For PiCoin, predictions from 2025 to 2028 show a range of possibilities. Coin Codex projects a modest range of 46 cents to 67 cents for 2025 to 2027. By 2028, they anticipate a range between 91 cents and $2.81. This suggests gradual adoption and increased market recognition. Looking further ahead to the year 2030, long-term price predictions for PiCoin become even more speculative. However, they also reflect the high hopes some analysts have for the project. Coinpedia analysts, for example, believe that Pi Network could experience a sharp rebound from its current challenges. Their long-term projections suggest PiCoin could reach as high as $1,000 by 2030. This ambitious target is contingent on several critical factors. These include widespread adoption by users and businesses. It also depends heavily on successful listings on major cryptocurrency exchanges. Many other crypto analysts and financial forecasters share a similarly optimistic long-term view. Some project that Pi Network could trade between $500 and $1,000, or possibly even more, by the end of the decade in 2030. These predictions often assume that Pi Network will successfully transition to an open mainnet. They also assume it will build a thriving ecosystem with real-world use cases. The large existing user base is frequently cited as a strong foundation for achieving such growth. If millions of users actively use Pi, demand could indeed drive the price significantly higher. The financial model from ChatGPT, as shared by analyst Mr. Spock, also provides a 2030 valuation. This model predicts a range between $106 and $399 for PiCoin in 2030. Section 5. Engines of growth, key factors that could propel PiCoin. Several key factors could act as powerful engines for PiCoin's potential growth and a future price rally. One of the most significant catalysts would be listings on major global cryptocurrency exchanges. Platforms like Binance and Coinbase are industry giants. A listing on such exchanges would dramatically improve PiCoin's liquidity. It would make it easier for people to buy and sell Pi. This increased accessibility often leads to higher trading volume and greater price discovery. It would also serve as a form of validation for the project in the eyes of the wider investment community. Another crucial factor is the successful transition of Pi network to an open mainnet. Currently, Pi operates on a closed mainnet, limiting its interaction with the broader crypto economy. Moving to an open mainnet would allow Pi coins to be transferred freely and integrated with other blockchains and services. This step is essential for driving genuine demand for the token. It would enable Pi to be used in external applications and traded on decentralized exchanges. The timing and smoothness of this transition are critical for building and maintaining investor confidence. Strategic partnerships and continuous ecosystem development are also vital for PiCoin's growth. Section 6. The Power of the People. Pi Network's community strength. One of Pi Network's most distinctive features is its remarkably large and engaged user base. The project reports having over 47 million engaged users globally. This is a substantial number for any cryptocurrency project, especially one still in a closed mainnet phase. This vast community is not just a passive group of token holders. They are actively involved in mining Pi daily on their mobile phones. They also participate in discussions and contribute to the network's growth through referrals. This level of engagement can be a powerful asset. This large community forms a ready-made network effect. A network effect occurs when the value of a product or service increases as more people use it. For Pi Network, having millions of users already on board means that any new application or service built on Pi has an immediate potential audience. This can attract developers and entrepreneurs to build on the Pi platform. It also creates a large pool of potential consumers for Pi-based goods and services. This inherent user base is a significant advantage that many newer crypto projects lack. The community's belief in the project can also contribute to its resilience. Section 7. Navigating the gauntlet, technical hurdles and execution risks. Pi Network faces significant technical hurdles and execution risks. Delivering a scalable and secure blockchain infrastructure is a primary challenge. Mobile mining must handle millions of users and high transaction volumes. Building such a system requires significant technical expertise. Failures in scalability or security could undermine confidence in the project. The transition to a fully open mainnet is a critical and risky step. Section 8. Market realities and regulatory mazes. External challenges for Pi. Beyond technical hurdles, Pi Network must navigate a complex landscape of market realities and regulatory uncertainties. One immediate market challenge is the current lack of price discovery mechanisms. Because PiCoin is not yet widely listed on major exchanges, its true market value is difficult to determine. The prices seen on some IOU markets or small exchanges where Pi might be unofficially traded can be highly speculative and not reflective of broader market sentiment. This uncertainty can deter serious investors and make financial planning for the project more difficult. The management of tokenomics and maintaining a balanced supply flow is another critical market-related challenge. The recent unlocking of 11.2 million Pi tokens, which reportedly contributed to price pressure, illustrates this point. The project needs a clear and transparent token release schedule. It must carefully manage the supply of new coins entering the market to avoid overwhelming demand and causing price crashes. Striking the right balance between rewarding users and maintaining token scarcity is essential for long-term value stability and growth. Navigating the global regulatory environment for cryptocurrencies is perhaps one of the most significant external challenges. Regulations vary widely from country to country and are constantly evolving. Pi Network, with its global user base, must ensure it complies with relevant laws in numerous jurisdictions. This includes rules related to securities, money transmission, and consumer protection. Section 9. PiCoin's destiny, groundbreaking innovation or fleeting hype. PiCoin stands at a fascinating crossroads, embodying both immense potential and considerable risks. Its innovative mobile mining has cultivated a massive global community. This user base could form the bedrock of a vibrant peer-to-peer economy. The project's philosophy of accessibility and energy efficiency resonates with many. These fundamentals suggest potential for groundbreaking innovation. However, the path to realizing this potential is laden with challenges. The transition to an open mainnet is a critical test. Technical scalability, robust security, and compelling real-world use cases are essential. The project must manage its tokenomics and navigate global regulations. These are substantial hurdles requiring expert execution and foresight. The journey to a fully functioning open currency is long. Analyst predictions for Picoin's future price vary wildly. This reflects the inherent uncertainty surrounding the project. Optimistic forecasts hinge on successful exchange listings and strategic partnerships. More conservative estimates weigh significant execution risks and competition.